Hello, Mrs. Hood. How are you today?
I'm well. How are you, sir?
I'm not too bad. Welcome back to Sam and Dean's Financial Services. The last time you were here, we went over some of the services that we provide to you as far as, financial planning, some insurance, estate planning and all that. But what brings you in here today?
Actually, today I am looking at disability and life insurance.
Okay, well, let's start with the disability insurance. Disability insurance is definitely something that is critical and something that you should have. What you may not know is that you probably already do have certain kinds of disability insurance. First is the federal through the Social Security, and you have through the state, which is called Workman's Comp. Now there are some differences between the two. Social Security, the amount that you draw is based on the amount of time that you've actually worked and put into the Social Security system. Now the state Workman's Comp is only work related. So, and it varies by state as how much that they pay out.
So that would only be if I got injured on the job, yes?
Only on the job is what workman's compensation is covered for. The other one you can kind of manipulate a little bit.
Okay.
Now the third one is private insurance, where you could buy from a regular insurance company. And looking over your criteria, I've actually had that entered in here. So you're a Catholic education coordinator, so you make approximately $25,000 a year. So in order to make 75 to 80% of your after-tax income, which is $980, covered up to 65 years with a 90-day elimination period, the cost of that insurance would be $31.31 a month, or approximately $95 a quarter, or $183 semi-annually, or annually the cost of $359.
Okay, what is an elimination period? What does that mean?
An elimination period means that from the time that you get entered and you actually file for the disability, is that how long it takes before you actually receive the money. So that's a 90 days. So if you get hurt on one day, you file, it will take 90 days before you receive any compensation.
Okay.
There's also some other things that you need to know about the disability insurance. As you stated before, the workman's comp is only work-related, and it is also covered by states. So if you were to get injured in Missouri, then you actually move to Kansas or Kentucky, the rates may change or fluctuate a little bit depending on what the rates are for the state. I told you before, Social Security is based on the amount of time that you've worked and actually paid into the Social Security system. Most insurance companies and the federal and state only cover up to about 70 to 80% of your after-tax income. Now there's a reason for that. If they were to cover more than that, there would not be any incentive for people to go back to work after they got injured.
Right.
Okay. So there's also some other features that you need to know. So the definition of disability is actually where you're not able to perform in your current occupation or any other occupation. So there's a difference. So you could qualify for disability if you're injured and can't perform your own occupation, or if you're so disabled that you can't perform any occupation. It also determines on how much you draw for those two. There's also a combination of the way a combination pays for the first 2 years, and then after that it depends on if you're able to do any job after that. There's also a way that the payments are calculated. There's a residual or partial payment, and what that means is, so you get injured being a railroad, working on a railroad, but you take a job working at McDonald's, and then there's a pay gap. Now the residual or partial payments will make up the difference from your railroad pay. That's how that's calculated, and that's also to make sure that you want something in your privately owned disability insurance. There's also a couple of different durations. Short-term disability is considered 6 to 2 years. Anything over that is considered a long-term disability. So that's something that you need to look at when you're doing your future planning. Elimination period, you asked about that earlier. That's basically, it depends on the insurance plan that you buy. So the longer the elimination period, the cheaper the insurance is. So basically, if you're doing what you're supposed to with our financial planning and you have 6 to 9 months income saved up, you can actually wait a little while before you start drawing the disability, so your rates will be a little bit cheaper.
Okay.
Waiver of premium. You also want that in your private insurance. Now, waiver of premium means that if you get injured on the job, that you do not have to pay the premium while you are injured. Only when you return back to work will you have to start paying the premium again. So you want to make sure that you get that in there. There's also a rehab coverage. Like I stated before, you worked on railroad, got hurt, and then you worked at McDonald's. So the rehab coverage provides for training to get you back into a useful skill. Sometimes it might be the same amount of pay that you were in earlier, or it could be a lower pay. So those are some of the different features of disability insurance. So did that give you any idea of what you're looking at toward?
Yes, that definitely gives me something to work with and see what I need to do.